What's up, guys? It's July 31st, 2024. Last day in the E-mini. Had a FOMC day today. Bulls put a gap in on the daily. Here's a bull gap now. So bulls have closed the bear gap. Here was a bear gap and it got closed today with today's price action and the overnight price action. And then they put in another gap here. Oh my gosh. Is my computer lagging? I'm just trying to make this gap so we can see. Okay, so that's good enough for now. Okay. So bulls got this gap now. Question is it going to close or stay open? Here we go. Save that. So we got a bull gap here showing bull pressure. Bears are going to get trapped if limit order bears don't get 50% not 50% pullback, but if they don't test limit order bears here, if the breakout happens, they're going to get trapped. Excuse me, I said that wrong. It's these bears that get short here. If they don't get a pullback, they're going to get trapped. And so these bears that oh, it's been a long day. These bears that got short down here are trapped, so they need to pull back to get out 50%. Bulls that bought here, buy lower, they get out. Okay, really big gap up. Great for the bulls, on the higher time frame. This is the first on the daily chart. We have first dip below the EMA since May 30th. It's been a few months, so this is the first dip below, and the pullback's longer. Here we barely spent any time. Now we spent a few days below the EMA. So definitely more range bound, more selling pressure than last time we were below the EMA. Gap up. Bar 1 is a bear bar, so that's not good for a bulk scenario. However, in a really big bar, sometimes a follow-through bar can be a take profit bar. So maybe that's what we see is swing traders taking profits, people overnight traders, London session taking profits. We pull back and the bull gap stays open. Bar 2, so bar 1 opens, sells off. Bar 2 opens at the low and goes to the 50% of bar 1. Bar 3 is an outside bar. It traps bulls and bears. However, there's a gap, so we're trading above the higher time frame EMA and above the 5-minute EMA, so bull setups are preferred. We have a buy the close rally here with 4, 5, 6, 7, 8, 9, 10. To buy the close rally, you can buy any bar for a scalp. First pullback 11, 12, and they get a leg 2 with 13. 14 is follow through, not the strongest follow through. 15 is sell off. 16 is a bear bar. I think they're more sellers, and bears get their leg 1, leg 2 pullback into support here. Bar 17 is testing the high of bar 8. Excuse me about the cough. Testing the high of bar 8, and then it reverses. 2-bar reversal with bar 17 and 18, and then a buy the close, another rally to the high. This is a very, it's a channel, it's a bull channel, but lots of overlap, and the closures are very small. I said that wrong. The closures are very weak, so they're not closing strongly above the previous candle. It's like just by a couple ticks sideways, Bulls go for a new high and it sells off into the EMA. We go sideways here for about an hour, and then bears get there. This could be a delayed leg 2 in ranges. Delayed leg 2s happen. Leg 1 pullback leg 2, or there's multiple ways to count. It doesn't really matter how, as long as you can frame the markets. Okay, there is a right and wrong way, but what you got to understand is leg 1 pullback leg 2, pullback leg 3, pullback leg 4, or on a smaller time frame, opposite bars are legs as well. So it could be leg 1 pullback leg 2, pullback leg 3. On the spot, if it's a trend line break, so here bar 31 breaks this trend line, so this can be the start of a second leg, and there could be a fractal leg. So this candle right here, how am I saying this? The high of bar 29 to the low of bar 30 has a deep pullback right here. So even right there's a leg 1, leg 2. Go to a smaller time frame, I'll show you what I'm talking about. So I'm talking about right here. there's a leg 1, leg 2, and we can't see it, but I want to draw it out real quick. So leg 1, that's not what I'm looking for. Oh, this is it. So leg 1, pull back. Oh gosh. Okay, let me delete that. I'm just gonna go to the time frame. Seconds. That's not right. I did not mean to go to the whatever time frame that is. Let's just go to the 1 minute chart. Okay, where are we? Here. See? Leg 1. So there's actually 3 legs here. Leg 1, pull back, leg 2, deep pull back, leg 3. So you gotta, that's the fractal leg 1, leg 2, leg 3 move. So it's a leg 1. Within bar 29, there was another pullback here. Leg 1, pull back, leg 2, pull back, leg 3. So you see 30's high broke this trend line right here on a smaller time frame. So that is a leg 1, pull back, leg 2, pull back, leg 3, which is what we just saw here. 2 seconds. Okay, now let me go to the 1 minute. So see that trend line break? That's the high of 30. Pull back, leg 3. And then even look at, and then remember I said opposite bars are pullbacks on smaller time frames. So if we went to a smaller time frame, leg 1, pull back, leg 2, pull back, leg 3. That's a wedge bottom. So it's fractal. You can apply the thinking across all time frames. It doesn't matter what time frame you want to trade. I'll recommend to trade the 5 minute. Sideways price action, wedge bottom, and then this is the FOMC report price action. It got volatile. 49 sell off, 50 bad follow through, 51. There's the second leg for 49, but it reverses higher, trapping bears, including myself. I got trapped. I think this is where the report started. I was trapped here thinking we were going to test lower. Pretty annoyed. I was green on the day, then I got chopped up right here trying to go long and short, and then I went short one time here and scaled in, and then it reversed. I was like, damn it, I lost the gains today. That's what I get. I normally don't trade FOMC. I just trade the first part of the day and I leave, and then today I was on a win streak, kind of got cocky, and yeah, gave it all back. It's okay. Moving forward. Today was an easy fix, just don't trade FOMC. Got these bull legs, which is pretty nice. Easy leg counts with trend line breaks, right? Leg 1, leg 2, leg 3. And that's just counting trend line breaks. So here's a leg 1, bar 55 breaks the trend line. And then from 55, so you can even say here's another trend line break, because now we understand the right, like right here to here. But I was counting it more like this, just easier to read, with 62 breaking the trend line, and then a climactic leg 3 right here that reverses lower for a few legs. You guys see how I'm counting the legs? Leg 1, trend line break, leg 2, trend line break, leg 3. Wedge top, parabolic, reverses lower for kind of like a expanding triangle and contracting triangle. Let me delete these real quick. There's that triangle, and then we contract here. See? So pretty interesting price action. Maybe this can go more down here. There. This is the top. Weird looking triangle, expanding, contracting, hard day. It's a range day. A lot more overlap, kind of like a bull flag. I don't even know. I'm just drawing. That's not even I don't even know what that was. I just wanted to see the shapes of the swing highs and lows and how it made a diamond. Strong sell with 67, follow through with 68, 69, breakout with 70. 70s breakout gets follow through. Here's another trend line break on 70s wick. So now we know leg 1, pull back leg 2, trend line break, leg 3 right here. Leg 1, pull back leg 2, pull back leg 3 into support. Tail on 72. Double bottom of 73. Reversal. Bulls are getting a deep reversal, testing the high. So this is more range bound. We tested all the way back to the top of the breakout point. This neckline here with 69's neckline, we tested it with 75, 76. Sell off. Leg 1, pull back, leg 2, pull back, leg 3, reverses higher. A lot of implied leg counting today. Implied leg counting works great in training ranges. Definitely practice leg counting. There's many ways to count legs. Hope you guys are doing good. Hope you guys did better than I did today. I learned my lesson. I'm just done with FOMC. I always try and push it whenever I win. I'm going to stick to the plan this time for the millionth time. Hope you guys have a good one. Thank you for the support. Thank you for all the questions. I appreciate the questions. Keep them coming. Have a good one, guys. I'll talk to you later. Bye.